Morning, everyone out there in Stocktwits Nation and the world. This is Daily Rip Live. I'm going to start calling it DRL, like TRL. Shay, good morning. How are you?
Doing good, doing good. Lots of news flow over the weekend, digesting it a bit. Feels like more drama today, and the new reality show that we live in, which is the Trump America.
Yeah, we are in it. I want to run through some headlines, and then I know we're looking at our show notes, and it's about 4 pages of content. There's so much to talk about. But real quick, let's all catch up together with what's going on, what we're looking at, being aware that the situation is constantly changing. So Shy and I have our news pages, our trackers open, our Bloombergs, our everything open, and we'll be letting you know as we see things. But let's start with yesterday. It was a bit of a whiplash. The rally had us in the first half, not going to lie. Kind of feels like the markets blew a 3-1 lead. We started with a 4% pop, and it all kind of fell apart. So a White House report confirming the 104% tariff hit the wires around midday, sending stocks spiraling. The S&P 500 lost $2.3 trillion in market cap, closing below 5,000 for the first time in nearly a year. Over to the indexes, the NASDAQ led the indices downward, finishing the day negative 2.15. The S&P was down 1.57%, and your grandpa's index, the Dow Jones, came in down 0.84%. All 11 sectors closed red, and financials held up the best somehow, negative 0.17%. And consumer discretionary was taking the biggest hit. They got smoked, negative 4.3%. So once again, tariffs is the word of the day. So midnight last night or this morning, depending on how you look at it, the reciprocal tariffs hit 86 countries. China alone could face $400 billion in new duties. The VIX closed at a 5-year high. The S&P is now just 1% from bear market territory. BlackRock downgrading all U.S. equities, and J.P. Morgan sees a 79% chance of recession. That's up about 20 points since I think Monday. So it's escalating quickly. And then, as we've talked about, this economic political entanglement continues. More and more GOP senators feeling confident enough to speak out, proposing a trade review act. One of the most vocal, Rand Paul. Love his hair, by the way. His hair is one of the eighth wonders of the world, I think. But he's coming out and saying not all trade deficits are bad. Not every trade is bad just because you're on one side of it. So you have a lot of things brewing at once, and we haven't even touched on what's going down in the bond markets, which is the other big headline of today. So we're going to get into all that, but real quick, we got, as Shy mentioned, it's a reality show. There's some catfighting going on. I can say catfighting because I'm a woman. And we have Navarro and Musk. Catfight of the century right here. So Navarro saying 70 countries will negotiate, 0% tariffs won't be enough. Interesting, there was a political report out this morning where a lot of countries are saying they're not getting called back by the U.S. I don't know if it's they can't get through the line or they're just prioritizing, but there's a lot of countries coming out and being like, yeah, we're trying to negotiate, and literally no one is picking up the phone. On the other end of that, Musk saying that Navarro's dumber than a sack of bricks. So really, really mature stuff going down right now. Makes you really feel confident about, the powers that be. Healthcare, the other big headline. So healthcare names rallied on news. The Fed will pay insurers more in 2025 with a 5% rate hike boosting the sector. That's affecting Humana, CVS, United Health, all seeing boosts. And also in the green, Lockheed Martin on Trump's $1 trillion defense budget push. Shy. Feel like I need a break for a second. I don't even know where to begin with all of this. When we go through all of these headlines happening right now, well, first, actually, let's step back. You were on CNN yesterday. So tell us what you talked about and what kind of the big headline was on that interview, and maybe what's changed today.
Yeah, so I think the primary talking points on that interview yesterday was my open letter to President Trump. I think I sent it over the weekend. It was something that was really honest, to be honest. I wanted to really share my frustrations on Trump becoming POTUS and the outcome of that. I think, like a lot of investors out there, myself included, clearly when I'm saying this, I think we all needed detox. Like we needed the economy, the governments, we all needed to go through some kind of a detox period where for decades, to be honest, like the US economy was playing the rich guy at the table, picking up the check for a global order that no longer worked in our favor. And I do think that had some consequences. Like it hauled out our industrial base. It enabled clear, unfair trade imbalances that some people might have called diplomacy, but I called it we were getting taken advantage of. So now we eventually had to stop because it was unsustainable. You financially, morally, politically, like we cannot keep pretending that a consumption-led economy held by near 0% interest rates and global fragility from the supply chain was going to be a long-term solution. Something had to give. We needed some kind of rebalancing period. So when Trump ran on that policy and that got him elected, easy win across the board. I thought it was going to be for like a harder, smarter America First policy that pushed for fair treatment, no more U.S. picking up the bill at the table, and there's going to be some kind of industrial strategy to make us be that America First like we used to be without having to support the whole world. But this is not what we got at all. This is not what he's rolled out wasn't detox. It was whiplash. It was something that had no operational playbook. It had no roadmap. I have zero idea what a success, like what the metrics of success even are with his current plan right now. This was obviously an attempt to just cause shock. He dropped a bomb, and right now we're left picking up the pieces. So I think that was like a lot of the conversation I had on that call was I'm up for a detox, but we have no roadmap on what success even looks like, and I don't even know when what the timeline is going to be even more. Like we're not even in sandbox right now of factoring risk. There is no end on how bad this can get. You just got this morning. China is going to be making our tariffs 84% in response to our 104%. What is the end? There might not be an end. There could be 500% for all I know. Like that's the craziness. Like things are escalating drastically. And I do believe something's breaking. Like I made a post last night where I'm pulling it up right now, or if Keith, you want to. It was from last night. I said something just broke. Recession gears on the tape, but yields are still ripping like growth is on fire. So typically when the 10-year yield spikes, that means risk on assets should also spike because that's telling you growth is on fire right now. Mm-hmm. But that's not the case at all. Where right here, you can see that we're getting higher rates. Like we're actually above 4.4% now. We hit 4.5% actually in the 10-year yield. Like the bond market is telling us something. But you see the risk on assets, like QQQ down 11% in a week. Something is breaking, and this is going to have some serious consequences. And I believe some funds will get blown up in result of this if this continues. And that's going to be open the floodgates for capitulation, and that's going to be where the real fear is going to start happening in the market when we hit those new lows. So it's conflicting information, and it feels like something broke because this never really happens. I want to say it happened once last year, but I can't remember when. That was the only time it's ever really happened. And yeah, it's just dangerous times out here right now. I'm not gonna sugarcoat it. And I'm a perma bull. Fourth industrial revolution just started, but I'm slowly adding to the names I think are gonna come out of this stronger eventually. But I think there's gonna be more blood in the near term, and I'm the most bearish I've been in quite some time.
Yeah. I think something that resonated with me when I watched, definitely Shay posted the clip on his X, check it out, because it was very authentic and raw. I think sometimes people like to go on these shows and, you know, they're very curated, they're representing a certain ideology or a certain company. And I think, Shay, what I appreciate, you just went in there and it was very clear, you were very articulate with your thoughts, but it was clear your frustrations were coming through. And I think something to think about with all this, and we've been having this conversation last few days, with where you start to get in you start to criticize certain policies or people, and immediately just the environment we're in, it's oh, you're on this side. And I think when we look at it, if you look at a business that you believe in and you believe in the direction of the company and you believe in the product, the people in charge can still mess up. They can still make mistakes. And as a shareholder in that instance, you can speak up, you can criticize things and still believe in the vision and the goal, but you might disagree in the execution. I think that's what we're seeing now with sort of this a little bit of a shakiness on everyone was sort of lining up, falling in line, which is, a very effective thing to do politically. When you push something forward, you want everyone to be in lockstep in the same talking points. But now you're seeing, someone like a Rand Paul, who probably in a lot of points agrees with generally the direction, not okay with the execution and the way it's rolled out, and is feeling empowered to speak out. We have a poll I want to pull up from the Stocktwits community, because one thing I love about the Stocktwits community is pretty politically diverse. So we asked the Stocktwits community if they still supported Trump's tariff policies. This was the 7th at 5 p.m. This poll looked a lot more even the last time I looked at it. Now we have 55% of people saying no, still a solid over a third saying yes, 10% unsure. So we're monitoring that, and let us know in the chat. But I think what we're seeing is some people that were kind of in the wait and see mode. They weren't quickest to come out and just hate on everything that was going on. But now that they're observing things that are happening, they're being kind of real with how their opinions evolving. And I think it's okay for opinions to evolve. One thing that I thought was really interesting is Tom Lee, who, as you guys remember, he was last couple of weeks, he's been pretty bullish. He was predicting a V-shaped recovery. He actually issued an apology on behalf of him and his firm, and basically said that, they didn't make the right call. But then he pointed out, he said, quote, "The White House has broke a core covenant of capitalism." And so you start to see these statements like this, and yeah, it's crazy. There's so many things I want to get into, Shy, but let's go to the bond market and treasuries and what's going on there, because I went to bed early because I was going to wake up and get all prepared, and I woke up and all hell broke loose in the bond market. What is so weird about what's happening in the bond market with treasuries right now?
Yeah, so I mentioned it on my post yesterday where we're getting conflicting information. Like, you don't have the 10-year yield rates going up and risk on going down as drastically as it has been the past week. Like, that indicates to me something is breaking, and it could just be capitals retreating, not realigning, and everyone's just trying to find this just escape this environment. That 100% could be the case. But I don't know, something feels like it broke. It really does, because like we had the largest, I forgot what the statistic is, but I think we had the largest 3-day increase in the 10-year yield in 40 to 50 years. So I think that some trade broke down completely. And I do believe that it's very unusual price action. And when something that unusual happens, like the first time in half a century almost, like it indicates to me something broke. And I think there's gonna be some funds that break that's gonna increase the liquidity of the sell-off potentially. And I think that the bond market's screaming something to us that there might be some stagflation risk that might come to light right now. And unless things change, this could be a reality. Like, people thought this was maybe like our potential nightmare, but it's kind of slowly showing to me that it's not a nightmare. It's actually a reality where I'm trying to, like, Trump's policy. I think it's such a fluid policy right now, but I do think like he is clearly trying to tackle China. I know he's like doing this across the board, across the whole world. But I think that if you just hear the commentary from Washington over the past couple of years, there's been a clear shift from cooperation with China to confrontation. Like, the U.S. is structuring trade and capital now, not around like what's going to be increase their GDP growth, but around leverage against China. So I think right now, U.S. is weaponizing their position as because everyone relies on the U.S. consumer. They're weaponizing that to provide leverage against China. And let's be honest, like I mentioned, like we are the demand engine. Like, sure, China might rival us in GDP, but their economy, they're fully like this might be a hot take. I don't think it is, but it's built on exports. It's not really internal demand. It's really their strength relies on moving goods out, not really pulling capital in, and I think that what makes them really vulnerable. And I think that's something that if you want to break an export economy, how do you do so? You don't go after their goods directly. I think you go after everyone because if they're an export economy, you go after everyone around their circle and make their lives painful so it tackles the core issue, which is China. So you force the world to choose us or them. You don't get both. So I think that's what Trump's playing at right now. He's not clearly indicating it to me. This is me reading between the lines, but it makes sense. Like an export economy, how do you inflict pain? You cause pain on the whole world, so they're forced to go on your side and leave China fighting for themselves. And now China has no leverage anymore, and they have to come to the table at the realm of the U.S. So that's kind of my take on what's
Yeah.
happening, and it might work, but it's gonna break some things in the meantime.
Well, I think what you called out is actually really important because it hit on a question that I had because when I was kind of digging into this, I'm reading that exports from China to the US are about 18% of their exports. But to what you're saying, not just about pain on the US. They have a lot of exports. It's not just about us. So I think this is interesting because I was reading some conversations this morning, people talking to business associates, people they know in China, and some of those people saying they feel like they're in the position of power because they are diversified on the export side of things. But I think you're right, and the blunt force trauma makes more sense if the goal is to hurt everyone around them. And I hadn't thought of it that way because I'm thinking of discourse like we need a fair deal, and we're like negotiating with a country whose per capita is like $4,000 a year versus us, which is like 80 grand. It's like, well, like, are we really? Is this little country bullying us, or are we bullying them? But it's about the mass kind of shift in policy, I think. And then what you're saying is it's about China, but they need to make it about everyone else too.
Well, that's the only way to really tackle China is make it everyone else like essentially squeeze China out as well. It can't just be the U.S. If it's the U.S., like China will survive. Probably, maybe they'll partner up with some other components of the world, and like maybe a World War III happens. Sure, fine, that would suck. That would be awful. Actually, that
Sure,
would be fatal.
fine.
I don't think that's gonna happen. It's gonna be really that's just next level. But I think this
Yeah.
is clearly the ploy from Trump, and they just haven't communicated that. So this is just me. Again, I international business finance major in college. I had to take poli sci classes. I loved the poli sci classes. I just didn't know how to apply that in real world. So like I didn't
Mm-hmm.
pursue that. But this is just me playing that gaming, which is a lot of poli sci is just gaming. This is why I think that's happening. And if it is,
Yeah.
I hope so because it's going to work in a matter of weeks, maybe months. I mean months, maybe weeks. And if, but the issue is like I think everyone was caught off guard that this was the route they're going to take, and it's going to cause a lot of SMBs to go out of business. It's going to cause a lot of consumers like this might be the straw that broke the camel's back on their debts, and now they're going to file bankruptcy. Like it's going to affect a lot of lives in the immediate, but if it works, it's going to be a structural benefit that's going to last decades, and he's going to be goaded for it for sure. The issue is though nobody really knows the timeline, and that's scary uncertainty.
Yeah, I think also we were chatting earlier just about how, I don't know, a few weeks ago, our conversations were so different. We were talking about thematic trends, we were talking about interesting pockets of the market, interesting leaders, and now it's this macro shift. And I think for investors, this is a real moment where the macro piece is coming into play. And to your point, yeah, remembering things like the Smoot-Hawley Act from high school. It's like, what the hell's going on? But as an investor, this is a whole other realm of things to explore and understand and research that honestly, we're pretty insular up until this point. We've had supply chain issues in the past, but there's always a Drake meme for everything. I love it. But yeah, I think to your point, and I want to pull up this this tweet from Ed Elson. He's super smart guy. He co-hosts Galloway's podcast. I know, I'm sure the chat's gonna pop off. People love and hate Galloway, but Ed is a really, really smart dude. And he's basically calling that like this is a fundamental paradigm shift in the way he's thinking about the stock and the bond market. And you saw glimmers of this actually with I believe it was Jamie Dimon's note about was it Jamie Dimon? Who said the 60-40 portfolio is dead last week? Somebody was talking about that and moving to more private market invest. So I think this is a shakedown of this. This is what our parents taught us and their parents taught them. And the world is changing really quickly. Things are realigning. And as an investor, you can't necessarily look to the past. And I think, Shay, this is kind of what you were pushing back on Austin a little bit yesterday, where are the fundamentals, is it that these companies are all being oversold, or are some of the fundamental things that shape how they run their businesses changing forever?
That's the thing. Maybe not forever, but it's going to change. Like the pieces on the board are different now. And because the pieces of the board are different, your moves are going to be different because maybe the risk and reward isn't the same before Liberation Day. And I think that there's going to be like, I don't want to say this upcoming earnings cycle is wasted, but I kind of do want to say that because it doesn't matter how strong of a beat you have, you're always going to ask yourself, all right, well, what if things get worse? Can they really sustain this kind of competitive advantage or this kind of momentum? Like that question is going to be on top of everyone's mind always on even a really strong print. Like, okay, those backwards looking, but this environment's different now. So can they succeed? And that's what's going to be a wasteful earnings cycle. And God, if you miss and you guide down, there's going to be gap downs significantly because there's going to be re-ratings. This environment justifies re-ratings because there's going to be global pain. There's going to be actual structural fundamental pain from all these tariffs. There's like proof on it. There's going to be proof in the numbers. So I do believe that you have to have a cash position because I think that this is a short-term bump. It's not a headwind. And we're going to get some wonky 20% move down, gap downs. And on businesses that will be thriving in the fourth industrial revolution still, like that thematic is still going strong. It's just, that's not a big rock right now. It's just not. And I think you just got I made comments like past couple weeks, like boogeyman is guidance. There's going to be no guidance. What do we get so far? Delta said we can't. Delta removed their guidance. Walmart removed their guidance yesterday as well. Like nobody is going to report guidance when they don't know what the pieces of the board is going to be next week. They don't know if tariffs are going to double. So because of that lack of clarity of what they anticipate going forward, it's a dead earnings cycle. So it's all Trump. It's Trump, Trump, Trump. That's where all the attention is. And until we get more clarity, until China blinks or Trump blinks, we're in a mess. And
yeah. Well, the mess just got messier because the EU just approved their first set of retaliatory tariffs. Breaking news.
Really?
Yes.
What was it?
So 27 nation block, 25% duties on metals. Oh wait, no, that was on them. I think I read it was 25% back at us, but I don't know if this is confirmed in the reporting currently. It's a breaking story, so we will dig into it. But they did approve their own counter tariffs. So let's take a look at how that's impacting things in real time. The futures are down 400 points at the moment. But it's really interesting though, because you look at things in the short term, and like yesterday when we were closing out the show, we were feeling we're like, oh, this might be a good day, and then boom, midday.
Well, I called the intraday fade. I was like, there's gonna be profit taking that's gonna happen from this.
Yeah, big time. So yeah, I think everything you're saying, makes a lot of sense, especially with the earnings. And it's gonna be. I'm really excited. Not excited. I'm really fascinated to hear the commentary part of the call. Like usually we're just like zeroing in on like, okay, what were the numbers? I want to hear how they're describing things, what words they're using. I think if there's any intrepid people out there, I would love an analysis using Gen AI of like words used the most
Well,
often, tone, sentiment. I think that would be fascinating for
I
someone to do
I
that white paper.
I can promise you guys this: the word of the earning cycle. Like again, I can't come from corporate strategy. Like I used to be in these war rooms providing the terminology and answers to the C-suite on responding to these earnings. It's gonna be flexibility. Everyone's just gonna be saying, "Oh, we're gonna maintain flexibility, so we're gonna take our guidance down." Flexibility, flexibility, or optionality. One of those two words. That is going to be the word of the quarter, and that's gonna essentially buy them time. So I wouldn't be surprised if that's going to be the by far the most popular term for this earnings cycle is flexibility, and it's corporate BS. That's just
Yeah,
it's
it
the
is one of
environment is
those
clearly
words.
fluid or something like that. It's just gonna be stupid
Yeah.
like that.
Flexibility. It's like when there's a problem, they say challenge. I feel like flexibility is like, yeah, we don't know. We're gonna be amorphous until we figure out what the heck is actually going on. Um, I did want to. Before I know we're nearing the opening bell and we have a lot more to cover. There was I thought, a very interesting interview this morning on CNBC with Vlad Tenev from Robinhood, our pal. He phoned in. He was at some conference. Yeah, he's in a lovely green jacket in a green setting. Just looks like he's a Scotsman in the countryside. But very interesting to hear his take here. So over the weekend, he tweeted out that he was a free trade guy. He kind of speaks for the voice of retail investors right now, and I think he made some interesting comments there, and also what was clear is what he wasn't saying, and I think it kind of reflects the tone of a lot of business leaders, where whereas like Rand Paul's fine sticking his neck out, business leaders are not, and so even they pressured him a little bit. They're like, "How long will you personally take these hits, and how long will your users?" And he just didn't answer the question. I think it's still a place where people like him, they're scared to kind of speak out and say what they're really thinking, but what they don't say is almost as impactful as what they do say. But one thing I want to ask you about, Shy, is I was going back and forth with Joe Wiesenthal on X yesterday, and I do think the current people in charge politically are underestimating how much a lot of people give a shit about the markets. I think they think stock market, and I think they think people's 401ks, boomers, older people, and they look at like the ownership of assets by dollar amount versus the fact that millions and millions of us are in these apps every day, whether it's $100, $100,000, $1 million. And I wonder what that impact's going to be politically, because this is like the first real time since 2020 that people are very in it. And you could say 2022 we were there too, but this is kind of like a self-inflicted thing. And I'm curious what you think about that, because I think historically you think people involved in the stock market lean a certain way. I think that's completely blowing up. I think it's all over the place now.
It is all over the place. I don't think there's any. You can't be boxed in. The environment, no individual or demo is boxed in anymore. It's actually very fluid. So there is an unpredictability about that. And I do think right now you feel the frustration across the board. Doesn't matter how much money you have. It's morally, financially, politically. Like everyone is just so frustrated. And I think that you're kind of feeling that with the narrative on everyone's edgy. Everyone's like kind of quick triggered. Everyone's um, got a hot take. Everyone's got to like acting defensive. And when one person is just running the show, and even his like support, White House support, just saying conflicting information, like it's a circus right now. And when there's a circus that's affecting your actual everyday life, things get hairy. And that's exactly the environment we're in right now. And I'm seeing what the market is though. We're about to open in 1 minute. It's weird. Growth is green, but Q's is like, oh wow, Q's is definitely about to go green. I,
Yep.
the opening's gonna be
Why
wild,
why is
guys.
that? What's going
We're,
on with that? Do you have any hypotheses?
we're oversold on the daily chart and the weekly chart, like we are. So maybe this is another technical balance that's just shorts covering because we got the negative news overnight, like we did, and that should typically cause a 2 to 3% downward move. But we're not getting that because maybe you just never know what's being. The market's a forward-looking mechanism. You just don't know how much is being priced into their forward-looking guidance, and that's why when there's bad news that snowballs on each other, and the moment that the market takes it and doesn't react as you think it would, it actually is green like today. That could be telling on what's being priced in, and China, EU responding with additional tariffs. Market's taking it right now, and it's being priced in. So now maybe we're in a digestion period. Maybe we don't like. There's gonna be no V-shaped recovery, guys. Like it's not. We're not gonna have a V-shaped recovery. It's gonna be a technical bounce, most likely a lower high before a digestion period. But maybe the bottom's not there. But either way, I've been saying I've been saying for a week, QQQ is going to hit 380 to 385. I really do think that's going to be the Q2 bottom. But right now, it looks like we're getting somewhat of a relief bounce. So plan accordingly. And also the VIX is at a 50. Like, think about that. Like the COVID high, when COVID was at an all-time high, it was at a 60.
Mm-hmm.
This is a lot of fears priced into the market right now when VIX is at 50. So you have to ask yourself, how bad
Just picture
can it
where
get?
we were back, like that, the first few weeks of COVID,
Wow,
the
QQ is
hysteria.
exploding right now, actually.
Wow.
It is up big time.
Are there
What a bid.
certain tickers within there, or is it a broad-based trend?
Nvidia's up
We tap
3%.
into like a Tesla.
Yeah,
You
so
guys are seeing
Tesla,
anything that you follow, pop, let us know in the chat. We'll pull it up and we'll talk through it. We're all in there reading everything you're writing. Energy stocks, banks, yeah.
yeah, so
All right.
Nvidia was green this morning when QQQ was down 1.7%. So again, Nvidia is a great pre-read on maybe what's going to happen in the market. You guys hear me say this constantly throughout this, like every day. Like I look at Nvidia, see what's a good barometer of risk on. It was green when QQQ was down 1.6%. So that was a tell. I think I really do. Yeah, Palantir's up 4%. IonQ's up 5%. Yeah,
Do
Tesla's
you
up
think
3%.
Palantir
Yeah,
part of
so I
it?
do.
Oh, sorry, Shy. Keep going.
No, no, no.
Oh,
You
we're
ask. Yeah,
delayed.
sorry. There's a lag on my
No,
end.
I was gonna ask if you think part of the Palantir rip is this military spending news that came out. You made this point before of is future budget, is it going to Raytheons of the world, or is it going more towards these like data software providers like a Palantir?
So I think it's funny because Palantir is just following alongside much of the AI trade bucket. Like on the surface, it's really frustrating because this is Palantir is a company that stands to benefit from the very chaos that's really driving the market lower right now. So in a world where geopolitical instability is rapidly like reshaping the global supply chain, operational clarity is going to become not just essential but vital. You need it now. So as the operating system of AI through Foundry, like Palantir thrives under these conditions where its software wasn't just designed for peacetime optimization, or it wasn't really just to help I don't know, decision makers to kind of navigate their uncertainty. It's meant to give you solutions in real time, conflicting, chaotic data. So the more chaos we see, like right now, the tariffs just blowing up the supply chain, the more urgent the need is for a platform that can just unify all that fragmented data streams into actionable intelligence immediately. Because speed is going to be just as important right now for the global supply chain as the tariffs are. You have to be able to react accordingly and efficiently and aggressively. So you need these AI agents who can reason, simulate, and act at the speed of this disruption that we're seeing from these tariffs. And that's exactly what Palantir's wheelhouse is. So again, I'm talking my book, guys. Like I get it. Palantir's a top 3 position for me, but they thrive in chaos. And this is chaos for the supply chain. So this could be, I don't know, it's massive talent for Palantir where they're just like, we don't have to sell ourselves anymore. Just look at the board. Look at the chessboard now with all the pieces. Like in order for you to make your next move on the chessboard with all the pieces just moving, you need us to provide you the actual intelligence to make the next move, or you're gonna do the wrong move, and that could be fatal. Like it could, in this environment we're in, any future move from enterprises could be a fatal one because there's no cushion anymore for error. There's none when the margins are this thin with the tariffs just skyrocketing. You need the actual intelligence that give you the precise way to move forward, and that's Palantir.
Yep. Yeah, let's you guys are throwing a lot of tickers in the chat and there's a lot of interesting things going on. So let's pop in to see what's trending in Stocktwits. Of course, we have that fun feature where you can see in real time why things might be moving, although these days it could be a confluence of factors. Somebody threw in their TMC, the metals company. They're up 2.5% today. Assuming this has to do with European tariffs regarding metals. Not too familiar with these guys myself, Shy, but somebody called this out. So let's take a real time look and see what's going on here with the metals company. It looks like they deep sea mining exploration. So yeah, I don't.
Wow, it's a small cap.
Yeah. But they're moving there. We're also having people ask about the direction semiconductor bull shares. These leveraged ETFs are really interesting to watch right now with the way things are moving. That one's also ripping up a bit as well. I've been, just because I have a penchant for drama, I keep checking these leveraged ETFs in throughout the day just because their movements are wild. So let us know if you guys are hanging strong in those or reassessing. And if there's anything else you want us to dig into, definitely drop it in the chat. Let's flip over to the What's Trending page on Stocktwits and see what we're looking at here for today. I'm pulling it up on my side as well. We have, okay, Alibaba. Alibaba is moving up 2%. So, Shai, you think that's direct response to the China tariff news? Let's click into the trending and see what's going on.
I have no idea what China's. I have no idea why China's green. It should not be green. That's actually very surprising to me. Let me see if there's a technical reason.
Escalated to increased tariffs. The community is sharply divided. Some view the situation as a buying opportunity. Oh, go ahead.
Yeah, I'm looking at the daily chart. It's actually right at. Oh my God, this is lagging. The 100 SMA, I mean the 200 EMA level, which is $101. So it's sitting right at the 200 EMA level on the daily chart. So it feels like it's just hovering at that technical level. And also there's the $100 a cycle level as well. So that's why I think it's happening right now. But it looks like it's no, it's going above it. So this is a pretty big level for Alibaba. And I think, let me see what the next volume shelf is for. Oh, wow. Yeah, this could really bounce, actually. This could see a 15% move if it holds 102. That's interesting. But again, China's a rental, guys. There's no, in this environment, you don't buy rentals, in my opinion. This is when you slowly DCA into those long-term winners, multi-baggers, that when we get out of this period, which we will, we're going to get out of it. Nobody knows when, but we will. You want to hold those high conviction long-term winners and just let it ride it out instead of, oh, Alibaba, it's a rental, maybe it's a catalyst trade, fine. You buy it, it goes to 125, 130, and then you probably have to, and then now what? Like when this whole thing gets resolved, all the other long-term U.S. conviction names are going to run, melt-facing rally. You're going to have to sell this to buy that, and now you have to deal with taxes. You have to deal with like which names to add. Like it's just like messy. So like view this as rental, guys.
I feel like the capital gains tax is becoming less top of mind for at least me. Also on the trending, Pfizer getting hit a little bit. There was a rumor. I don't think it's confirmed. I think it was just a statement, but potential high tariffs on imported pharma. So obviously some mixed sentiment there. yeah, we can see what happens in the pharma space too. But that was another. It seems like every day they start like leaking little bits and pieces of things that may or may not be real, but the market reacts in real time. Shai, I know I kind of glossed over the semiconductor ETF, but thoughts generally on semis in this environment we're in right now.
Well, I can't beat Pfizer at 20, but I had no idea Pfizer was that cheap. That's got to be like a decade low. I also think
Yeah.
they offered like an 8% dividend, so that's an interesting level right now. But for semiconductor, what bad timing was that DeepSeek playbook reveal? Wow. Because that was a massive headwind on a narrative. It was because
Hmm.
now training data, it was proof that training data is going to become much, much more cheaper and much more commoditized, much more democratized. And now it feels like, oh shoot, the pricing power that a lot of these semiconductors had, I think maybe the glory days are behind them. Everyone knew like me, like it was a hot pocket time, and that's why they're able to charge an arm and a leg for what they were actually offering in AI hardware. But DeepSeek provided a terminal window on when that's going to stop, and I was like, oof. And there's some opportunities right now in the semiconductor space where they're all moving along each other when there's actually a handful of like semis that are going to be thriving due to the inference data explosion we're about to have as AI tools become cheaper that are just getting penalized because they're a semi name. So I do believe that there's opportunity there, but that headwind is like that was really bad timing because guess what happened 1 to 2 months afterwards? We have this tariff war, and semis are heavily exposed to China and Taiwan. They're heavily exposed to that region. So if there's going to be tariff conflict from the East versus West, this is one of those industries that are going to be the most vulnerable for those tariffs. So they have two massive headwinds, and the third one is they're cyclical. It's a cyclical industry. So when things are going great, it's really going great. Just look at the past couple of years. When things are going bad, dead money, dead money. So I think it.
Okay. Oh
Shut up.
my God. That's confirmed. That's a not a that's confirmed on Truth Social, or was this another Walter Bloomberg classic? It's a pretty. Oh God. Well, I don't have words right now. Shy, do you?
We live in a reality show.
Yeah.
I can't believe I can't believe he's shilling his own stock right now.
See, this though, I didn't put that together at first. See, he always does this, the plausible deniability. He could just turn around and say, "Oh, that was me signing the tweet, my initials." He didn't put the cash tag on it. There's always a possible plausible deniability, but damn. Uh, the the doubling down is fascinating. It is, which it's not surprising. There's, we all know people like this that like, sometimes you go down a course and you want to change, and some people are very graceful in changing that course. This is not that type of person historically, but what would be the impetus for doing that? Can we pull up a chart of the Trump coin actually? Um,
I think it's like down 99%.
yeah. It'd be funny if we all just rallied around Melania's coin just to cause some friction. I did see also that unfortunately the Musk Trump fart coin is also down 18%. So, it's just rough in all of these key areas of the market today. What a weird thing. To our producers who are following this in real time, I'm curious what the sentiment and reactions are to this right now, because yeah, it just doesn't make much sense of all the things to say right now. You think it's a distraction, Shy?
So this is so insensitive, him just like doing this. It really is. Like people's lives and businesses are getting blown up right now, and this is like what he's tweeting, and he owns billions of dollars in the stock. Like he's gonna sell the stock. It's not a real business. Like this is morally frustrating to see.
Yeah. Wow. Yeah, I'm like, this is fascinating, really real time. Uh, I think people are just shocked, but it's crazy. I mean, got to give it to him, his ability to still shock people at this point. I didn't think that was possible, but there's always new highs and lows. Let's see what's going on post uh, post that, whatever that was. S&P taking higher, even as trade tensions are intensifying. The QQQ, as you pointed out, Shy, is in the green. S&P is also in the green. Dow Jones down slightly. Do you think this is gonna hold? Or I mean, yesterday you were pretty skeptical. Do you think there's gonna be another profit taking moment today?
The reason I thought there was going to be a profit taking yesterday is because the tariffs were going to get implemented last night, so people didn't know if how bad it was going to get on the response from it. But we got more information overnight and this morning what the response is going to be. So I think that um, it actually might last a little. I think that we might be in a bounce, short-term bounce, and the reason for that is because we're oversold. I don't know how the velocity of this bounce. I don't think it's gonna be a face-melting one unless we had any kind of news that China or Trump blinked. But I think this is somewhat of stabilization in the near term, and it's just great to see. But I don't know. It's all we're gonna hear. Earnings season starts on Friday, so that's gonna change the whole game on how severe things are gonna get.
Yeah. Let's turn to Apple because they're popping up a bit and they've been in the news. And while we're doing that, I just dropped in the chat. Just generally curious what you guys think of that tweet. Like, I think there's different camps. Some people think it's funny. Some people think it's not serious. But like, kind of with you, Shy, it's, we make light of certain things here for levity purposes. But like, that's kind of effed considering the source. But I'm curious what you all think. Open to other perspectives. Drop it in the comments. After we talk through Apple, we'll flip back and kind of hear what you all are thinking on that. But Apple, they're popping up a bit. And of course, yesterday, I think it was yesterday, the day before, Trump making a statement that he believes that iPhones can be fully made in the U.S. and done so affordably. Any thoughts here on Apple today, Shy?
I mean, it's oversold in near term, but I've been very bearish on Apple entering this year. I think they're a consumer financial engineering stock that's heavily exposed, that's vital to consumer lives, but they've shown nothing to me that they can innovate. They've had duds after duds after duds. So I do believe that the days of Apple becoming the innovator is over, and I think they should be capitalized on consumer AI right now, and they're not. They invested poorly, and they don't have the talent to back it up. So either way, it's just that's not my. It's just a mature company that's financial engineering. It's nothing special anymore. I use a product every day. Using AirPods, I'm on my iPhone. It's a hardware company that has a great ecosystem around it that they can print cash, but I don't have any confidence they're going to capitalize on the next latest and greatest. They haven't proved me otherwise. They just haven't proved anything in a decade.
Yeah. It's interesting because this conversation, I always like I'm nodding, but then I'm like, well, who's gonna take them down? Like Google has got a million things going on with Android, uh, BlackBerry. Everything can change though. Obviously, if you look at Apple's come up,
Well,
they just took over. But I wonder, who is it going to be? A new entrant? Is it going to be someone else? Who can get in there? Maybe take advantage of this situation.
so there is a interesting angle, I think, and it's meta. Hear me out on this. If AR and VR takes off, eventually it becomes like actually an important component of every consumer's lives. Meta's creating an app store for their AR and VR Quest, the Quest Vision Quest. They're creating an app store around it where people or companies, developers are having apps going on that app store to directly feed into their AR and VR Quest Vision. So I think, whoa, if there's a world where you can call interact, text, do whatever you could do on your iPhone just through your AR and VR goggles. That's a disruptor, especially when Apple clearly failed at the what them trying to tackle AR and VR. So I think that is an interesting like whoa, that could be a headwind, but that's me not fantasizing, but like it's not near term reality. It's just like if you ask me a question, I'm just like, um,
Jesus Christ.
that's what could be.
I
This is
mean,
nuts.
this is just not someone who is well. I, I don't know. We're in the comments. Someone said all in Bitcoin with American flag. Bitcoin's not really doing great either. Someone else is saying Emperor Trump. That's I don't know if you're kidding. Hopefully. Another point here, talking about Shay, you brought up morality of all this and these types of tweets. Someone asking morality of Walmart coming into small towns and adding to the
Oh,
issue.
I hated that.
Yeah. But I think this brings
Yeah,
up a point. This is the thing that drives me nuts in current discourse. It's like we're talking about one thing. It's not a counter argument to say, but what about that thing that's completely like they can both be messed up. We can say that. So yeah, I continue though what we were saying with Walmart, Shy.
no, I mean, I don't love what Amazon did either. Like, I don't love what Walmart did. Capitalism is brutal.
Yeah, well, Walmart's the
It just
single
is. It's
biggest
a very
employer
brutal
of
concept.
people. Yeah, but like Walmart employs more people in this country than anyone. So there's always like, it's never black and white.
So
Yeah,
no, so I think Walmart provided such a high floor, but they destroy the ceiling. If
hmm
that makes sense to you guys,
yeah,
they're you can't just be an SMB or mom and pop anymore. But they provided security blanket, so at least you can like get by. But they essentially handcuffed so many Americans by disrupting the SMB mom and pop business model by just like, oh, we'll pay you $25 an hour. Maybe like middle management, you'll get 100K, but you're strapped now. You're never gonna have the flexibility you dreamed of, the American dream, and that's sucks to see
yeah,
because I am somewhat of a romantic with that kind of stuff. I romanticize about the American dream, just having no ceiling, optionality. I think those days are behind us, and it's gonna get even worse with AI. To be honest, like maybe AI gives us a David versus Goliath. Like finally, like we have the tools to compete with the Goliaths out there. Maybe that's how it goes. But also, I just think the bigger whales are gonna optimize AI to kind of phase out people, and that's the issue. Like
yeah.
it's a
I think
delicate time.
the Walmart Amazon. It's so interesting because it's like, is it a Walmart thing or is it just the free market rewarding Walmart for doing what it was doing? But I think it's interesting. You go across the political spectrum, and I think generally people agree in small business and entrepreneurism and the American dream. And it sort of, once we agree on that baseline, it sort of falls apart on the how. But it is interesting that a lot of people still hold that up, and like you said, it's an idealistic view of the world that sometimes feels like it's slipping away. Um, but as we talked about here,
Hmm.
sometimes moments like this spur David Goliath moments, new innovations. Who knows what some kid in his garage is going to do with AI, and we just don't know. But yeah, I think loving all the comments, guys. I know you guys are usually chatty, but today especially so. I think times like this, it's really important to talk about these things openly. And I think what's great about the business community is a lot of these conversations, while they do sometimes enter political territory, we can always root it back into the business and the financial and the economic kind of groundwork. And I think that kind of keeps it chill, or as Trump would say, we're being cool. I'm not really sure what that means. Um, but yeah, I don't know if you guys saw, we pulled that second. He's still going. So interesting to see the markets keep responding to these things, or if after a while it's like, all right, shut up, grandpa, like time to put you to bed.
I mean, I don't know. It's like lighting a match lighting a fire and telling everyone just chill, just keep drinking, play your music. Like there's a fire in the room, but just it's not gonna hit you guys. Like it's controlled. It's in the middle of the room, but hang out on the couch, like hang out on the table, keep drinking, keep chilling. Just
Yeah.
ignore the massive fire that's just sitting right in front of you. That's
Yeah.
essentially what I'm getting from Trump's comment right there. And I also don't think it's Trump. I think it's probably someone on his team. It's a rhetoric. He's
Eric.
not. Yeah, it's Eric. Like these aren't just like random things. Like there's something being. It's a pawn in some kind of scheme he's trying to get at right now, but it's insensitive is what
Yeah.
I'm trying to get
I mean,
at. It's
this
just
is
people are suffering.
yeah, the debate too is some people are like, oh, it's 4D chess. There is the line of thought every time something like this happens that looks like just like a dumbass thing to put out there. There's like an intent. It's like for a reason in this moment. There's an entirely other camp of people that's like, this is just an idiot. Like there's no thought behind this. And like I think about this because I don't know. No one knows. I don't know what's worse. Like honestly, I don't know what's scarier. Someone someone who's like clearly like trying to manipulate, which you would expect from a politician. Like I'm kind of like cynical now. I expect a lot of these things. But then it's like, or they're just, there's no, and that goes back to the whole uncertainty of everything. Like there's no plan, there's no playbook. This is just someone popping off. And I don't know what's worse for the markets. It might be the latter.
I think the confidence is fractured. I don't think anything about like that tweet solidifies the confidence. But hey, QQ is up 1.6%, so maybe that was the savior we needed. Not all heroes wear capes.
Let's. I gotta say, this hour went by the fast. This has been the fastest hour of my life, and I feel like we didn't even like talk about half the things we wanted to talk about. But yeah, it looks like we're checking back in. We're in the green. Dow Jones up slightly, 0.58%. S&P 0.86%. Nasdaq up 1.63%. We will see as we came across on this show. Anything can happen at any time. This is like Survivor meets Big Brother meets Real Housewives of Washington, D.C., and God knows what else. So uh, buckle up. And again, like, Shai, I'm going to give you the last word on just kind of where your brain's at for today because I feel like you're very even keeled. But just a reminder to our viewers, keep having the conversations going in Stocktwits. Like, these are the best times to be exchanging ideas and connecting with each other and definitely make use of all the features there to stay informed. But Shai, where's your head at? Are you cool heading into the trading day today? Would you say?
So I think my biggest advice, I think for everyone right now is it doesn't matter if you're risk on or risk off. You don't need to be deploying capital today to make this time valuable. We're in a digestion period where there's so much noise, and today's balance, I think, is technical, short covering maybe. It's not a confidence rally. Know the difference. This is not a confidence rally, but you need to be doing work right now in this environment. And what do I mean by work? It takes hours to build conviction in names, hours. And a lot of times the market moves so quickly that you don't feel like you have the bandwidth or time to actually do the work to gain the conviction to add to certain names when there's so much fear in the market. So right now, I think is a perfect time to just go in the lab and do the research, do the work. Like the market's going to turn. It always does. The reset's going to end. Rates are going to stabilize. China or Trump's going to blink. Sentiment's going to shift. And and then all of a sudden people are going to want exposure again. You're going to see a face melting rally like we just saw a couple days ago, like on a hint of a fake rumor from Bloomberg. So, but the issue is that if you're waiting for that moment to happen, that face melting rally to figure out what to own, you're going to be too late. So you need to do the work right now. You need to study so that when we do bottom out, your hand doesn't shake when you try to click buy. You have the conviction to add when there's fear in the market, and it's not time to chase trades. It's time to build conviction right now. So don't have FOMO when the market's up 1.5%. Know that it's not a confidence rally. You're going to have the time to build the conviction, do the research, because when the reversal comes, like I said, it's going to, it won't wait for you to feel confident to add. Like make the market moves first, and your job is to be prepared. So by the time it does, You already have your laundry list. You do the work, and you can add within a minute, and you'll ride that wave up.
Love it. All right, so stay locked in. We will stay locked in. You guys stay locked in. We will see you right back here tomorrow again at 9 a.m. Eastern, as we are every weekday, Monday to Thursday. Good luck out there. Be cool. We'll see you soon.